some work in Nigeria, Botswana, Zambia, Kenya, DRC, Uganda, and these days I mostly spend a lot of time in East Africa.
Yes.
Yeah, I move around. I think sometimes when I'm in Uganda also I get to see Caleb. So,
Yeah.
The biggest assignment that we have, it's currently underway, is actually a restructure. So there's a large transporter who's based in Kenya, and their balance sheet is fairly large, but they got large on the back of debt. So part of my job is to package it for the lenders so that we can try to come up with a restructure of some sort. So it's a very tedious process. I get to engage with so many people who know much more than me. And I'm sitting there and I'm just like, oh, this is brain frying. And I'm expected to be giving the decisions. So it's been an amazing journey. And hopefully through this presentation, I can also just share what I think will make it so much easier for the people who are listening to raise their own money, and also make it clear at what point might you need to get someone else. But most of the things you'll be able to do it yourself. And that's the point of these webinars, to empower you as the entrepreneurs.
So before we get started, I wanted to share a bit about MonkeyPesa. We actually provide enterprise software largely for organizations in Africa. We look at your entire business and look at providing different tools to empower you. Our latest project is called the Joint Inbox Software. It's a single place where your entire company can communicate, whether it's sales department, whether it's the marketing department, whether it's the customer support department, have one place where all messages, no matter the platform they're coming from, come to, and you can respond to. So that means whether it's email, whether it's WhatsApp, whether it's Facebook, whether it doesn't matter the platform, it's just one centralized place for you to communicate with all your customers, and this place is available to everyone within the organization. So that's all about MonkeyPesa. So to get us started, let's dive right in. So Caleb, just tell me a bit, at the beginning, what does someone need to consider? Which question do you ask yourself to know if you actually need money for your business? Ideally, the question I'm trying to phrase is, do you even need to raise money in the first place? What should people consider when looking at that?
So great question. And I think, the answer is very funny. I'd actually say no. A lot of people don't need to raise money. You don't need to raise money because most of the time, before you think of getting external money, you have to actually look at your strategy. Is your pricing correct? Is your business development correct? Are you segmenting things properly? Is your overhead structure also relevant for the size of business you're running? And most of the time, answering these questions alone might leave you realizing that your problem is not money, because getting new money, getting someone to give you money does not fix these problems. And usually you can generate a lot of cash just by fixing these problems. And then the second layer, because the first layer is really
money will supplement whatever structure you have on board, meaning if you don't have the right structure, it will just propel that overboard, right?
Exactly. Well put. And the second layer of it is, the first one is operational, and then the second layer of it is also sometimes people want to get money which is outside of their ecosystem without using the things that they already have. You see that someone might be having a building on their balance sheet, or even a smaller entrepreneur might have a very expensive car, but you have things which are not working for you. You're going outside to look for money, when sometimes the best thing is to make sure that you at least maximize the things you have. So I think it's a very important consideration that sometimes when you're looking for money, depending on the quantum, also look at what you have, and also be willing to sell off so that you can also maximize the return on the assets that you have. The return on the dollar is like very important. Of the things you have, what have you done with it before getting new money? So I think that's the first kind of checklist in quotes. The first layer is operational. Are you operationally ripe to actually get new money, or should you get new money? And then after you fix that, do you have things that are not working which you could use to generate some income. So at this extent, I'll give an example. So some of the transactions I've done, of course, I mean, you understand the nature of my work that I might not be able to get into some of the details. But the point is, some of the companies I've consulted to is they have these assets on their balance sheet. These assets do not contribute to their core earnings, or if they are contributing, they're contributing to a very marginal, and the synergistic components actually not there, and they know. So sometimes it's actually better to just cut, because you generate cash, free up assets, and ultimately that decision is only when you can answer those questions can you move on to the next stage. Yes, I can raise money, but before that, no, most people don't need to get money. I hope
They don't.
that gives some sort of idea.
Yes, I think sometimes what actually pushes people towards trying and raising money, there's a lot of news nowadays. What you've started your new fintech, and
Yes,
next week there's this other fintech that started like 2 months ago has raised money. I feel like that is what
exactly.
is triggered. It's triggering many people towards thinking I actually need to raise money before even fixing what
Exactly.
fundamentals they have on ground. I believe to some extent, first do an inwards check before you go out and raise money. So question
Guys,
number 2, there's a lot of clarity that we need to put up in line with, yes, you're getting this money, but what do you give up in exchange for that money? At different layers, you'll help us understand. If you take, for example, getting money from friends and family, how much should I be giving up? What do I give in exchange? If I'm raising money from investors, what does that look like? And if I'm getting money from the banks, what is that structure like? Just try and help the guys watching this understand what do they give up in exchange for the money that they have raised.
thanks, Kenneth. So this is actually one of the core decision-making areas in what type of money you get, because the biggest trade-off that you have is actually liberty. When I was saying initially try to use as much of what you have before, is because you don't need to give up much. If you remain in control so much, you have so much of you before you raise money. But the moment you decide I'm going to get other people's money, the first thing is liberty. So liberty, what does that mean? It means disclosure. You might not have had to tell other people what you're doing, but now you actually have to. So disclosure is very important. And sometimes when you're operating by yourself, you don't necessarily have a big complex structure, but now you might actually need a board, especially if you're raising something like equity. And so you getting money will force you into some sort of structure. And then also you have to be prepared for input from others, even if you don't like it. They've given you money. You can't just take someone's money and then you have to be willing to
And then
also.
smile.
Exactly. You can't just take and walk away. And for equity specifically, you actually give up a stake, meaning the people become co-owners of your business. So which means the scrutiny is much more like, it's not, oh, I just wake up and just do this. No, the thing is not yours anymore. You've sold part of it to someone, and that means that you have to be willing to also take much more scrutiny. But the beauty of something like equity, for example, is if you need specific type of growth where you might not be able to generate enough to pay back. So for example, let's say you've got a plant which packages rice. The thing is, before you actually buy the plant to package rice, you might not you know that to get to 100% or 95% capacity of that plant, I need 6 months. But the problem is, if you borrow money, you now have to pay back before you. But some things like that might need equity financing, because you're not sure how things are going to turn out, and you need people who are willing to tolerate more risk. So make them co-owners of the business. So that's on the equity side. And then on the debt, the most important thing is you need to pay it back. And you have to be prepared. The moment you say, I'm going to get this money and I'm going to borrow, you need to be prepared to pay it back. And also you have to be prepared to give up something. So collateral, I think I'll touch a little bit more on it later. I I think I'll go in more depth to just give an idea of when you're getting debt, what to look out for, but also things like rights to cash flows. Before, money just comes in, you do whatever you want. But the moment you borrow, the lenders might actually require you to say, okay, when this money comes in, it goes to a specific account. You cannot touch it. And only after we have taken can your money come. So that means they might go to your clients and force the receivables that you're going to get paid to go into specific channels. And sometimes this might require a bond. So, for example, when we were raising money for the company which I used to work for initially, the one which I was telling you, the holdings company where I was working as an executive assistant. So they would borrow, say, $2 million. That $2 million would be secured against the receivables because it was a lending business. So the lenders would say, the 2 million we've given you is bonded to the receivables that you're going to give out. So when the money comes from the people you've lent, first comes to us, or at least through an escrow account, then we pay.
Wow.
Then we
Yeah.
So you
I
have
didn't
to
know
be
it
willing.
was complicated. Yes.
Yeah, it can get very complicated. And then also guarantees. If you're borrowing, be prepared, especially if you're a director, personal guarantees. And these are assets which are outside of the business. So if you have a house, that's you need to be prepared to put that something like that on the line. Of course, some of these depend on they really depend on the quantity you're borrowing. So if you're not borrowing much, then you might not need to. And then the last thing is also some debt covenants. If you're borrowing money, you have to be prepared that the lenders are going to ask you that in order to de-risk the money I am giving you, I need you to compromise on this. So, for example, minimum cash cover, you have to have X. This can be especially applicable when we're talking of, let's say your next installment is 500,000. If your next installment is 500,000, they might require you to pre-fund up to 500,000 before.
Yes.
Or sometimes they might require you to actually put up cash to match like some debt that you have, or at least have a minimum level of some sort. And also you can't just borrow, you can't just do things before they approve, you can't just get new investors. So sometimes these debt covenants is what do you give up in exchange? There are those things, and it's in the fine print, eh? Whenever you get a debt contract, you actually have to read to say what does that mean? What does this imply? If you don't understand, ask them. Don't assume, ask them. So I think that's really speaking much to what do you give up? What's the trade-off? If you trade off, the biggest thing is liberty. You're not going to have as much liberty as you have. And then if you equity, be prepared that other people are going to also have a say in how you do things. And then if it's debt, you need to be prepared that I might lose if things don't go as well. So I guess that's the general idea. Of course, I mean, as we go further, we will get into the specifics because also there's still ways around it, because borrowing money is a great way to create wealth as well. But hopefully it just gives more light into what you give up and how the structure post borrowing is like, or at least post giving an investment is like.
All right, so just to expound on that a little bit, you haven't talked about the friends and family round. Usually people don't talk about that much. Is there an active market in Africa of friends and family or small angel networks that you could easily raise money from? So just help us expound a bit of that.
There is certainly that, because especially when you're starting, because the most important thing is when you're getting money, the people who are giving you money want to be able to de-risk. It's like the moment you walk in, there's all these risks, and your job is try to remove these risks from their heads. The thing is, if you have data, and usually that's for an established company because you've sold already. So if you have something you've done already, it's easier for you to de-risk. But now you realize when you're at the early stages and you're like, oh, no, I've only done sales for the past 6 months or for the past year. It might not give as much cloud. So in that circumstance, you need someone who's more willing to invest social capital, because there are people who believe in you as a person. And that's why early on, it's something important rather to actually consider of the friends that I have, of the family members who can believe in me as a person. So that because I don't yet have the equity to back up the story that I have. But then as you get bigger, it becomes easier to have some of those conversations because you have the things that they require.
You have proof, yes.
Yeah, well, I think we hopefully later. I think where I'm going to also just share a little bit more on that to say what sources of money, where can you get money, and hopefully we can be able to give more detail on that.
All right. So question number 3 is, okay, what options of financing do we have in Africa? You know, our market is a bit different from the rest of the world. It's a lot easier to raise money in Silicon Valley than it is here. Now, for the normal business person, the normal tech entrepreneur, the normal startup, what options do they actually have to raise money within the African continent? Help us expand on that as well.
So perfect. I think this is a perfect segue from the point you were just highlighting earlier about when does it become relevant to raise from friends, family, and so on. But all of this depends on where you are. So because our audience is got a wide array, I'm going to try to put it across in a way which wherever you are, you can map yourself to say, okay, this becomes more relevant to me.
Yes.
So ultimately, the first thing is when you're starting, as we were just discussing just now, there are few people who might believe on what you're working on. Forgive me, maybe Kenneth, I can just add a highlight so that the audience can just follow.
Yes.
It's not distracting, eh? It's okay.
No.
All right, great. So when you're early in your journey, as I mentioned, that what you have less of data, you have less of actual factual information to de-risk what you're doing. So that also means that you might not necessarily pass the bar of a couple of financiers, especially later on, as we will discuss. But early on, your friends who can be your venture capitalists, your friends, family, angel investors, because they're people who are specific that you know what, I am going to take risk on these small projects. And usually it's not a lot of money. So I remember even Kenneth, when we were starting, remember our tech business that we came to you and said, wow, can you help us as an angel investor? And it wasn't a great deal of money, but at that point where we were, it was an important amount of money. And then accelerators and incubators are also important, where this has become largely popular in Africa. A lot of large organizations are saying, look, the future is so fluid. Why don't we set up like some sort of infrastructure to own the future through entrepreneurs? So they're setting up these incubators and accelerators, very important source of funding, especially when you're starting earlier in the business cycle. But as you grow, you might require larger funding. Now, I'm going to present the money in order of stressfulness. Stress is my measure. So I'm starting with the least stressful, and then I'm going to the more technically stressful. So a lot of people, especially in Africa, I don't know why a lot of people just don't explore grants and concessionary funding.
Maybe they don't have the knowledge, you know, they're supposed to find that information.
Yeah, you know, there is a lot of these organizations which are actually going out of their way to grant finance, especially for the youth and the ladies. There's a big push, and I really always, I'm always saying to my sister, you know what, you are intelligent and you have what it takes, but how come you don't present yourself to these people for the money? Like, who are they going to give if you're not going to pitch up? And I guess if there are any ladies on these platforms, guys, you have to be very aggressive because these opportunities are there. And these guys are not going to come knocking to you. You have to go to them. And then just that now, things like grants are starting to slowly evolve, where it's become more of soft loans. So, for example, I've been doing, the UN has been setting up a fund, and then they're working. So I've been working with several organizations within the UN to try to set up a fund. Of course, I mean, I can't go much detail into exactly what it's doing, but the point is, one of the things that they're doing in the funds, this is particularly for Zimbabwe, one of the things that they're doing for the funds is some of the grants are no longer just free. You get money, you walk away. But there's
Yes.
now some sort of soft loan type of arrangement, because before people just get grants and then they would vanish and not do the thing that they say they would do. So I think grants are generally evolving. So even if you're looking to access that type of money, be prepared to pay something back.
Yes.
And then, so that's the best. Like if you can just get someone to give you a grant and concessionary funding, that's but I mean for the rest of us, it's
There are actually quite a number of websites that issue these grants. Maybe after this after this, I will share a couple of links, and if it's important to you, you could actually access some of these. It's literally present, share a pitch deck and what you're doing, and many of these target people who have impact on the African continent. Are you doing something in the rural areas? Are you doing something in agriculture? So there are literally hundreds of those things that are coming up every month, and they're giving 50, 100K within that range. So I'll share quite a number of links that guys could pick up from. Yes, please go ahead, Caleb.
No, that would be largely useful. That's largely useful. From the grant, now we're going to the funding, which is a little bit more stricter. So the debt is less strict than equity and the other sources of financing. But in debt, exactly, most of you will be surprised. Most of you have bank accounts and your businesses have bank accounts. This is a DIY solution, like you. But the key thing is your banks only work with banks who will support you.
Yes.
This means that don't give your money, don't give your traffic to a bank which is not going to give you money when you need them. Like, don't. Like, if there's any bankers watching, I mean, be prepared. Your people must leave you if you don't support them. So what this means is that you also have to bank your cash flows, because I think a lot of, especially entrepreneurs, they don't understand the value of this. Whilst it's important to be able to do things in cash sometimes, or in different markets, it's more convenient to do things in cash. But the importance of banking your cash flows is you allow the bank to see your traffic. So when you go to them looking for money, you're not starting on a blank page. They're saying, who's this person? And they're like, oh, this is what you've done in the past. Yeah. And then banks also are fantastic because their requirements are very simple. They literally give you a form and you just fill in. They say, don't do things which are complicated. Just give us a form. We need you to give us this. And it's simple. It's less due diligence. That's what DD means. Sorry, I forgot to just, these acronyms sometimes it's just obvious to us, but maybe not to others. Less due diligence. And then also they collateralize. The reason why banks are simple in their approach is because most of the time they collateralize, meaning they need you to give them something like a physical asset. It could be a building, it could be a stand, it could be anything. But the point is, usually they say, give us X. But of course, they're smart. They can't just ask you to give them anything. So they actually get someone to do the valuation. And most of the time, they'll cap how much they give you. Maybe they'll give you at 60% of the price of the thing that you've given them. So that way as well, in the event of a fire sale, they're protected. And then mortgaging is also a popular option. So if you have a house, borrow against the house, borrow against the land, because that can help you just generate cash. And then
so just to expound on that, for most of us in at least some of the countries, we have as if most people discourage us from taking up mortgage financing. Ideally, most of the stories you hear around mortgages is you can never put your assets and borrow money against that because the banks will try and take the property away from you. How much experience do you have around that? And are the myths even true? Or is it actually a great way of raising money?
That's a great question. And I think a lot of people have big misconceptions. The reason, put yourselves in the shoes of the bank. The bank doesn't create money. Depositors put in money. So depositors have put in money. So you take the money which depositors have put in and then you lend out. So these people have a strict regulation around how they use that money. So when they give money out, they're also very adamant that as much as I've given you money, I am willing for you to give me the property, but that property I have to put a heavy discount on it, because if I have to fire sale to cover my reserves, then I have to be covered. So now when you see it from that perspective, you realize it's a purely commercial arrangement. You are going into that engagement for the money, but also understand what the bank is seeking from you, because they're also trying to protect themselves. So it's a great way of unlocking capital, but always read the fine print. Remember what we said in about what do you give up? That was a great question. Some of the covenants of getting that money, you have to read the fine print and you have to request. I think a lot of people as well on that point, they don't want to debate with the bank. So when the bank says, no, give me things like this, you have the power to say, no, I don't want to give you that. I want to give you this, or to negotiate it. But the thing is, it's not like, because remember, banks are also people. They're also trying to figure it out. They don't know it any better than you do. So sometimes when they present something to you, you have to also present your case. And that way you can also fine tune what you're getting from them. But it's a great way of getting cash mortgaging.
All right. Okay. Thanks for the clarification. No, please go right ahead.
So now if we're proceeding, sometimes when you need cash, purely because you've got a mismatch of cash flow. So for example, in our business, sometimes we'll issue an invoice and then the invoice is not paid, but we still have to pay overheads, we still have to pay salaries.
Yeah.
What you might need actually is just a bank overdraft, where the bank just extends the money to you, and then when you get your cash, you cover them. So that's a good way of dealing with those mismatches. And then another thing which is important is asset financing, where you go to them for a specific thing. So for example, if you run a delivery business and you want to buy a delivery vehicle, so to get a delivery vehicle, instead of going out of your way to raise specific type of money, complicated, just go to, it could be the bank. There are also asset financing companies, which are very specific. They only do hire purchase asset financing. If you want X, so also look what you want to use the money for. Can I use hire purchase or asset financing for that? Now we're getting into the less DIY stuff. That's why I say might need help.
Yes.
You might, most of the time, you'll be able to do it yourself, but sometimes you might need help. But we'll speak later on exactly when you might need, or at least the circumstances to help you think, do I need help or I can do it myself? And most of the time you can do it yourself, to be honest. So long-term debt, typically this is, for example, if you're looking for 3 years plus money. So if you want to do something which is more long-term, in other markets, I just say 3 years because Africa is very volatile. So I can only expect market. But you can see why in the West, 3 years is like that's very short term. But I mean, in Africa, 3 years can be long term. So if you get that money, be prepared for periodic interest payments. So this could be monthly, this could be quarterly. Again, you propose to the bank. So say to your bank, when they want their money monthly, you say, no, I want to be able to give you quarterly. And let them say no. Don't say no. They won't accept. Nuh-uh. Push the envelope. So, and then also on these types of structures, sometimes you might need a break where, let's say you want to do a renovation of a plant. I'll give an example. So I worked on a cement plant, which is in Uganda, and they needed to increase the blane. The fineness, blane is the fineness. So in cement, the finer the cement, the higher the blane. So they needed to, the plant that they had was producing 5,000 blane, but they needed to increase it to 8,000 blane. The thing is now, to do that, they had to make another modification to their plant, and it was going to take about maybe 6 months for them to do the work, and then after that. So during that 6 months, they're actually, this type of debt, especially when you go to institutional investors, I'll explain a little bit more who these people are and where to find them. But when you go to those guys, you can actually propose to them, look, I'll get your money, and then we'll charge interest, but I won't pay it. We'll add it to the principal for the first 6 months. And then after that, I'll start paying you back. Or at least I'll start paying interest only. And then after that, I'll pay principal. The thing is, be flexible in your thinking. Don't go to them with a rigid type of framework saying, oh, this is what they accept. No, be flexible. Like also think what serves you best. And then when we get into the more technical things, you might require ranking of the lenders. So of which, if you have bank securities, usually banks want to rank first. Usually, I mean, I've said always, but I think there might be exceptional situations where a bank might be subordinate, but usually that's not the case, because from a regulatory perspective, they have to be like senior in whatever loans that they give.
Very true. Yeah.
So what that means as well is sometimes you might actually have to tranche the credit. What I mean is, instead of all the money being in a senior context, you might have subordinate context where, of course, if someone is giving you money but they know they're subordinate, there's someone more senior to them, it means that the interest rate they will require is also what? Higher, because they're also taking more risk. But the guy who's taking less risk, or the lady who's taking less risk, must also require a lesser interest rate, purely because they're protected. So in the event of a default, they are priority in the cash flows. And then sometimes you then also can think of equity enhancement. How do you increase the return of the lenders? Because it's fixed. But as much as it's fixed, sometimes you also want the lenders to participate in the upside, so that you increase the investability of your case and even the attractiveness. But on that, the more we then move on to, I think I should have put Mez first. But equity is really straightforward. Someone, you are pitching your story, and we can have, depending on if the audience feels it's important to get into valuation on how to think on equity, we can maybe arrange a separate webinar and just go into detail into exactly how should you think when you want to sell part of the business, the equity, because there's a whole world of valuation, how to think of the different things that affect the value of your business, and how to think of it before you speak to investors, so that by the time you speak to them, you're ready. And then the last option which I've put is mezz financing. Mezzanine is really just a hybrid of debt and equity. So it's more expensive than pure debt, because they're taking a little bit more risk. They're going to be able to have step-in rights. They might convert. And also, some of their covenants are like a mix. So you have debt and equity. For example, debt investors won't require a board seat, but they might require a board seat. And then I think I've deleted something by mistake. But here, another covenant which debtors will require is a minimum cash cover. So you see that a mezz facility might have some requirements for debt, but also some requirements for equity. They want a board seat, but they also want you to maintain a cash cover. So those are some of the hybrid type of, and usually pref shares, convertible debt, and safes. Safes are a new, I think, especially for startups, where you kind of say, for now, just give me the money, and then at a point where you have a priced round in the future, where you raise money and value, at that point, I want to be able to convert the money which I've given you. But because I've given you early, I also need you to make a compromise. At that point, you have to discount, or at least you have to put a premium on the money I gave you. To say, okay, you gave me 50,000, but at that point, when you're doing a price round, my 50,000 is worth, say, 75,000, or whatever you agree. But the reason why that has become popular is it removes the headache from, especially early on in the business, when no one knows what the value of the thing is, and no one can depend on the forecasted cash flows. But early on, you can quickly just come up to a position, give me the money, and then at the point where we have a price draw, I'll convert, and I'll convert at a premium.
I think most accelerator programs are using the SEF nowadays. Even Startup Bootcamp in South Africa is among the ones that use this and recommend this, that whenever you're raising any funds too early, use this as the best alternative for you to do so, including Y Combinator itself. They have a SEF document that they have open on their website. So if you need to use this for your business, I could still send you a link after this.
Right, so, exactly. Exactly.
All right. So now the next question, I understand that despite the amount of funding you're raising, whether it's from friends and family, whether it's from the bank, whether it's from the investors, there's some sort of preparation that you need to do. What do you need to get investment ready? What do you need to get these people to pay attention to you? Ideally, what will these people be looking for at each of those stages of financing?
Perfect. I think this is where it gets interesting. And the key thing is story, as I've
Story.
highlighted. Story. The thing is,
Okay.
people have to understand why should they be part of your journey? Why? Because these
Yeah.
people have a choice. They don't need to be part of your journey, but it's your job as an entrepreneur to actually figure out why they need to be part of your journey. But also, this speaks to who you talk to, because not everyone should be part of your journey. Not everyone should actually join you. But at the same time, if you make a mistake and approach the people who shouldn't join you, usually you pay. So you saw the first thing that we say, what do you give up? Those liberties, you lose them very hard, and you have a lot of fallout, but purely because you went to the wrong people for a problem which might be better off fixed with other type of people. So
Yeah.
the first thing I would highlight is story. It's important for you to have your story straight. So normally these stories are presented early on in the conversation when you don't really want to divulge much information. You can prepare what's called a teaser, which is literally like, it could be a one-page document, it could be a 3-page slide, or whatever you feel is a minimum concise way of saying, what are you doing? Why is it a great opportunity? Why these people should join you? And you put it out, and then as the relationship develops, there's no like cutout formula to say, look, at this stage I might be required to put X, but be prepared that at some point they'll ask for more flesh, more details. Usually there's these documents called investor decks. Usually these are very popular for startups, but when you get for larger sized companies, you might need what's called an information memorandum, because when you, especially for the larger type of investors, because larger type of investors have a very detailed decision-making process. They're trying to answer a lot of questions, and sometimes just giving them an investment deck might not necessarily answer the questions that they are trying to answer. So you need a teaser or investment deck or a full information memorandum. I always think it's a good idea to always have a teaser, so that when someone wants to know about your business, immediately you can shoot them something. It gives them enough to salivate, to say, look, I want to pursue this conversation. And then the next thing that you need is a financial model. Everyone who gives you money is expecting you to return more.
Yes.
And numbers don't lie. So ultimately, what you want to be able to is to provide an income statement. Income statement is showing, okay, on a monthly or quarterly, whatever basis you choose to present the financials, but on say a monthly basis, what is the business expected to earn in revenue? What is it expected to pay for? And then on a balance sheet perspective, what does its balance sheet look like? What are its assets? What are its liabilities? What is the equity at a particular point, at each point in time? And then you also need a cash flow statement, which is saying, as much as we've received this equity, we've received this much from revenue, and we've paid this much from operations. We took out some money to pay for working capital, maybe it's to buy stock. We took out some money to buy equipment, so that's investing activities. Or we sold some of the equipment and received some cash. Or how much did we borrow? So the relationship between all these movements is brought together by a cash flow statement. So that cash flow statement then says, look, as much as we've done all this, at the end of the day, we've got so much cash. So that's what three-statement financial model means: income statement, balance sheet, and cash flow statement. And you have to pay attention. I think a lot of people don't get this part. Pay attention to the ratios. The lenders are using the ratios to make decisions: cash, income, solvency, debt coverage ratios. They are literally looking and saying, is this above this ratio? If it's a no, then X, we throw it out. So meaning that you have to also be aware, as you're doing your models, that to see, okay, at what point is my ask reasonable? At my point, is my ask not reasonable?
Yeah.
And then the obvious stuff, this is in the background. You have to get your documents up and ready. Things like, usually they'll ask you for KYC, company registration document. These first two are not really important. But the third one, a lot of people cannot pass this: tax clearance, filing returns, especially when you go to the larger investors. To the smaller investors, when you're at the angel round, or those guys might not care, or a VC, they might not necessarily care much about how you're doing things here, but it's always a good practice for you to have these things in order. And then also up-to-date accounting records, your management accounts, your annual accounts. If you can get them audited, fantastic, because if it's audited, it means that a third party has viewed the way you're doing things and has okayed it, which is a reassurance to whoever you're asking money for that the numbers I've given you are factual. So that part is very important. And then for larger projects, the documentation can get quite deep, and this requires a whole separate section. This is most of the time I spend my time in types of documents like these, or at least I'm not preparing them, but I'm putting it together for the investors. So feasibility study. So when you're looking for a certain, so let's say this usually applies to things like infrastructure projects and mines, for example. So those ones, before you start digging and mining, have you done a feasibility study? Have you looked at the ground? Have you looked at the soil? Have you looked at the sample of the extract? How strong is the ground for the type of mining method that you want to use? Or in the case of infrastructure, let's say you're doing a solar plant, how strong is the irradiation in that particular area? Or how far is the transmission? Have you done a grid impact assessment? Things like that. Basically, the point is people want you to help them de-risk. Always think from the perspective that there are all these risks that I know someone might want to know about my business. Answer them before they're asked, because it helps. When you preempt, then you also help things move faster. And sometimes you might need to give more detail about who is helping you get things done. Like for larger projects, engineering, procurement, and construction, it's very important to know who has done that work or who is doing it. Are they bankable? And then also post the investment, who's going to be running with the show. And the next thing would then be really on you. This is the key thing. To get investment ready, you need to move fast, because the more organized you are, the faster the deal. Have a data room with all that information that you think the investor needs. And then always have the ball in the investor's court. Don't keep it in your court. Like whatever you can do it and put it in their court so that the pressure remains on their end. But hopefully that kind of covers the question on basically what is required. And yeah, I hope I've done justice to it.
Yes, quite a bit. Right. The next thing we need to address is, some of us have very small businesses. You're based right here in, so for example, Uganda. No one knows your country. No one knows anything about you. So how do you market yourself to pick the attention of the investors in the parts that at least have money? How do you go about putting yourself out so that the banks can say, okay, yeah, we've seen you somewhere, or these other investors are like, yeah, we've actually heard about you. Any ideas around that?
Okay, that's a great question. But how do you get in front of people? Because I think it's also it's one thing to say, you need this, and then someone will put it together and like, okay, now what? Because most of the people get stuck there. Like you have brilliant ideas, you've come up with all the paperwork, but then now what? So marketing your business to investors is really something which is based on you and how much clarity you have in exactly what you're looking for. Be clear on your ask. How much is it and what are you willing to trade off? Remember, we've talked about trade-offs. What are you willing to trade off? So depending on what kind of money are you also looking for? Individuals have money. There's high net worth individuals. And this is now on the practical end to say, where do I get these people? So who is the high net worth individual? Sorry, Kenneth.
Yes.
All right. So who in your circles, who do you know who is high net worth, who you can ask to be part of your journey? And then the banks, we've already talked about approaching banks. And approaching banks, guys, is not complicated. Literally walk into the bank, say, I want to see the branch manager, and go to them and you say, this is what I'm doing, and I want money from you. And then just shut up, listen, let them speak, let them guide you. Because then they tell you, I want you to do this. But that effort of you getting up, literally going to the bank, knocking the door, and sitting down, a lot of people don't do that. So I'm imploring everyone who is on the platform, do that. And then institutional investors. So institutional investors, if you're a small business, if you're starting business, usually venture capitalists and private equity funds are your friends. So these guys literally walk in with your deck. Remember, we said, what documents do you require? You've got that document, you've got a presentation. This is what I'm doing. And knock doors. Don't be afraid to knock doors. A lot of people chase themselves away. They say, oh, no, I'm not ready. No. You shouldn't chase yourself away. Get chased away. Be told you don't deserve to be here. Get out. That's a better place to be. But the fact that when you walk into the first room and then you hear something, sit back after, write feedback, right? Okay, this is what I couldn't answer. This is what I couldn't answer. This is what I couldn't answer. Imagine after 3 conversations, how many things you
Very
will know.
true. Yes.
See, so it's that whole process and it's iterative. Do not be afraid of knocking doors. Institutional investors are basically big organizations who are pulling funds together from different things. And an easy example is pension funds. Because, for example, every month people are working and they're contributing pension. So the pension funds will hold a lot of money. They don't know what to do with it. Remember, having money does not mean you have the idea.
Yeah.
So you have these guys have this money and they usually channel it through asset managers. If you ever heard of this and that asset management, basically asset managers are managing money. It could be from individuals, it could be from pension funds, it could be from insurance companies, but basically their job is to wake up every day to say, what's the best use for this money? They always have a portfolio, a portion of their money which they have set aside to help entrepreneurs or venture or people who are starting businesses. And then depending on which stage you are, they can give you different type, because remember, these guys are more flexible than banks. So you also have endowment funds, insurance companies, because insurance companies, they're collecting premiums every month. They're getting so much cash. But remember, getting cash doesn't mean you know what to do with it. So they're always looking for you guys, entrepreneurs. Pitch up, tell us what you're doing, and hopefully we can do something together. And then another really, but usually for these, you're looking at large projects, is developmental finance institution. I'm sure a lot of you have heard of Africa Development Bank, Trade Development Bank, Africa Finance Corporation, and a lot of Exim banks like China Exim Bank or India Exim, or basically these are import-export agencies. And I'll give an example of a transaction which I worked on. It was in Uganda. No, it was in what's the name? Tanzania. So Tanzania, it was an abattoir. So that abattoir, part of the financing was coming from the Spanish Exim Bank. But the Spanish Exim Bank had, the reason why they were participating is because a Spanish company was building the plant and delivering it. So they say, okay, no, because you're buying from us, we'll help you finance the deal. So also be conscious if you need to get things like plants or some of the things from different countries. Also check whether that country's got like some sort of export facility to help the businesses in that area, because then it's funding. Like someone literally is giving you a plant and they've given you funding. So yeah, that's mostly the landscape of the people that you look at. Yeah, and then so, ultimately, just.
So, Caleb, please continue. Sorry, I cut you off. Hello? Caleb? Caleb, can you hear? Okay. All right. So just to supplement to what Caleb was saying in the meantime, my experience has largely been in the world of marketing and sales. What that means is part of what marketing is and what selling is means you need to understand how do you reach out to these channels where you can actually get money from. It's not just about the customers alone, but as well as the investors from. So what has worked from my specific scenario, allow me to share my screen shortly. Yes, Caleb, are you back?
Oh yes, sorry. I'm in Africa. Those are the perks. Those are the perks.
You can proceed. I will, of course, supplement to what you are saying, given that marketing and sales is in my docket.
That's your forte, exactly. You know what? So on this one, let me just quickly, because I had almost finished on this one, but what I was just saying, create a hit list and then use your network as a soft landing, and don't disrespect people. The accountant might be your in into that organization. The secretary might be an in into that organization. So think broadly, eh? And then also, this is something which a lot of people don't know, but there are these events, these investment summits. So, for example, on the 10th to the 11th of October, there's the Africa Investment, well, I don't remember the full acronym, but you can take the website, and then after this, you can definitely check it out. But this document as well will be available on a platform which Kenneth will share after with the community. So you can always just check it out. But when you go to a place like this, there is people from everywhere. They've got different problems. They've got money. They don't know who to give to. Or they're in field. They're also looking for money, but they could complement you. But sometimes the point is going to investment summits is very important. I'm working in Zimbabwe right now. The company which I used to do project management for after I did my stint in the asset management company, that company has a wind project. It's a wind farm, which is in Zimbabwe, and it's got a mast. But guess where they met? The company which is helping them do this. Of course, I can't give more details on exactly guys are, but they met at a conference in South Africa, in Joburg. Literally, they met, and then they say, "Oh, what are you doing after this? Do coffee or whatever." And then they sit there, have coffee. They're like, "Oh, this is what we're doing in Zimbabwe. This is what we're doing in Spain. Why don't you put together a wind plant?" And boom. Now, the thing, it's not yet operational. It's still in the development phase, but you get my point. My point is, in these places, there's a lot of people who are there, and they're off guard. But I also think, Kenneth, you can add a lot of flesh, because I know also you have a lot of depth in the business development.
Yes. All right. So mine is largely from the marketing and sales point of view. Marketing is not one way. It's not just to your customers. It's also to the investors side as well. So when you're in the world of sales and marketing, there are two most important segments you need to cater to. Number one is, where do I acquire these people that are investing in Africa? That is the first question that you need to ask yourself. Now, in order to help us understand that, I'm just going to show you something that has worked for us, worked for me personally, and I believe it will work for many of you as well. All right, so let me make Caleb an organizer. All right. Okay, so in order for you, if you guys can hear me, just leave a thumbs up so that I know that I'm speaking to someone. Caleb, can you hear me?
Yes, I can hear you. I can hear you.
All right. Okay, so the best thing that works, the first thing you need to consider is, I actually need to understand who is investing in Africa and where are these people. A great place for you to look for these people is a place like Crunchbase. As a use case, what you can do is go through Crunchbase and see, what is my competition like. As an example, on my Crunchbase, I have DusoPay Limited, which is a payment gateway. Now, if you're in the payment space, your first job is to understand, okay, has this company been able to raise money? These competitors of mine, have they been able to raise money? That yes. If so, who gave them money? You will notice that among these, you will see that there are other investors that have given that company money. You would be surprised how many times these investors want to hedge their bets. You will notice that the investors that come and give money to Didi or Flutterwave are the same investors that give money to their competition in this other part of the world. So, as a reference point, what you can do is use platforms like Crunchbase to try and do research and see, number one, who has invested in my competitors, and number two, what that does is it gives you leeway to know that, okay, these are the kinds of investors that are investing within Africa. And then step number two is, see, who are these people's competitors, because that gives you insight on who exactly you should be reaching out to. Now, after identifying these investors from whichever country you're in, look through and see, okay, now these are the guys who are investing. Literally go to your LinkedIn afterwards and search. Okay, so who is behind? As an example, Tiger Global Management. Literally drop that into your LinkedIn and it will bring you a list of every single person within that organization. From there, keep throwing as many messages into the DM and get direct. When you're talking to these people, be as direct as possible. They receive too many requests, so tell them what you're doing, what its impact is, and schedule for meetings. Don't try and push in too much. LinkedIn literally gives you whoever you would need to know. So that's one of the ideal places that you could go to understand who exactly is investing in Africa, number one, and get a couple of contacts to help you know who could possibly put money in your business. So these two platforms are quite a real deal, and any other site similar to Crunchbase, I believe, would work as well. So yeah, that works in line with prospecting for your investors. Then number two is, how do you position yourself when to pick these people's attention? You need to understand that people react to things that look nice. I mean, you're not going to tell me about your innovative company X and I'm an investor and not do research about it. Meaning, before I even reach out to you, say, for example, you found I had invested in DoSuPay, for example, and I'm an investor. You reached out to me via LinkedIn, gave me your company name, your name, and your details. The first thing I'm going to do is try and do a bit of research about your company if it piqued my attention from LinkedIn. So I'm going to go check out your YouTube channel. I'm going to go check out your website. I'm going to go check out a couple of those basics. So before you even go ahead and reach out to these people, make sure that your website looks extremely nice. If you have demo products, have them readily available. If you have an intro video on your website, it would go a long way towards helping you sell your story even before this person reaches out to you, because these guys are not naive. They're not going to benchmark on you. They're going to go and do a bit of research. They'll look through SEM rush and see your traffic stats. They look through a lot of the details even before they reach out to you in the first place. So as a best case, before you even reach out to the investors, make sure you have a pitch deck somewhere online. Make sure you have nice introductory videos. Make sure you have some kind of presence and you look good. It doesn't matter the kind of business you do. The process of due diligence is the same for anyone that you're trying to reach out to. So I believe those are two case scenarios that you should look out for. And if anyone needs just a better understanding of how best to structure your look for the investors, I'm also available to help. I leave my email here, so anyone can reach out to me after that, and I could help you structure that up. So yes, I hope that supplements what you were saying.
Very important. If anything, I think that gives a very it's like when you're ready, now you can you see that platform, and when these people search you, they find you and they're like, this is what we're looking for. They always must feel like they have discovered you, like you are the best thing, because it's very good, important for the relationship. And thanks for sharing those platforms. Maybe what we'll do is I'll actually incorporate those into the presentation as well, so that when we send out, there's access to that.
All right. Okay, so my next question to you, Caleb, is now, how, after you have raised this money, how do you manage investor relationships and expectations? Because I mean, now you have this money. Like you said, people will have interest in your business. How do you manage their expectations? How do you manage their relationships?
So you just allow me to share my screen for a second.
Yes, please.
So the key thing on managing investor relations is you have to communicate. So think of it as, we are going to be the best investment that this company has ever made. And being the best investment, that's a long shot. Investors basically, they must feel privileged to be part of your journey. Part of that is your job. You have to communicate to them that they're in the best ship, and you have to be consistent in your comms. So, for example, in the first company that I worked for, where I was working as an executive assistant, what we would do is monthly, we would give these monthly updates of the market, what's happening in the economy, how it's affecting us, and where we're going. Consistency is key in the timing when you deliver your message, and the quality of your message must be consistent. Remember, in Africa, very few people do that. So the fact that you do that already sets you apart. It gives them vested interest in the business. And then be truthful, fair disclosures, don't hide stuff. And don't, most importantly, manage expectations. No surprises. Like, people should know what is going to happen, because if you manage expectations, then you can't disappoint them, because you already have given them what to expect. So I'll give an example. If there is a strike and you know that there's consequences on the debt that we have to pay on X because we didn't meet our production quota, don't wait until the point where you have to make the payment to the lenders for you to tell them that, oh, we don't have enough cash. But you could tell them that there's a strike and it's likely going to affect our production. This is what we're doing to curb it, if you can do something about it. But it makes it so much easier when you come to the time where you need to do a restructure, for example, and say, oh, I was supposed to give you back your money by X, but because of this and that, I also can't participate as or at least I can't pay back as I had planned. But anyway, the point is, don't surprise investors. Manage them. Tell them, preempt. And also the other thing is, make investors work. A lot of businesses, they get money and then they do the work, but the investor doesn't work, yet he's got a stake in your business. Make them work. Use their network. Ask them to open the doors. They must work. They've put in money, but they need a yield. But you're in this together. They must also work. So you must actually demand them to do their job. Like, if they need to introduce you to someone, they must do it. If they need to arrange something, they must do it. And then the last thing is, don't be a pushover. It doesn't mean be arrogant, but be firm, because sometimes also, remember, these are people with ideas about where you must go, and they are likely wanting to take you to their route. So it's very important for you to also be firm. This is where we're going. This is why we're going there. It doesn't mean you're arrogant, because arrogance is a deadly it's a deadly route. You have to be willing to listen, but at the same time, be firm, because the truth is that the world is not black and white. A lot of things are gray. So meaning that that saying which says there are many ways of killing a cat is real. There's so many ways of getting things done, and sometimes you just have to be firm about the strategy that you're using, as long as you're listening and you're not being arrogant. But I think that's really the sum of I've had, I think on this one, I was privileged to, in that organization that I was working for, that sometimes I would handle that investor communications every month, and I'll get to engage with them. I'll get to engage with the asset managers, the private equity funds that ask me questions. And it's very important to be able to just communicate in time, and believability is important. I think that's something that I'm now also learning as I'm getting older. I'm like, you know what you say must be true and must be consistent. They need to depend that, no, if Caleb has said this is true. So I think it's something that build at the onset. Don't damage your reputation if you can.
Wow. Yeah, that's quite interesting, actually. So just one more question for me. Some people may be here and just not saying anything, but once in a while we need external assistance. As an example, if I were raising $1 million, I wouldn't even trust myself to confidently go to the bank and tell them I need $1 million. So when do you seek external assistance, and is it even possible to get you to help some of us raise that money if you're available anyway?
So most of the time, I think it's a trade-off. most of the things that I've shown you, it's just clear to say that if you want to raise money, there is a lot you can do by yourself.
Yes.
Don't give it a limiting factor that, oh, no, I don't know this, I don't know that, so I can't do it. That's not true. A lot of the things you can do by yourself, but there are circumstances where it's important to get someone who might be able to help you. So I guess this is some sort of framework to think about it, to say, okay, at what point might I need someone external to help me? Because so the first thing is it's a trade-off.
Yeah.
Do you have the time and the competence to put it together? So this you're comparing with your opportunity cost. Am I better off spending the next 2 weeks working on this or 1 month working on this than me working on the business? Do I generate enough to compensate me for the opportunity cost, like what it would cost me for us to get someone to do it? So I think that's a very important thing. If you see that you can't afford it, I think it's important to do it yourself. Like, roll up your sleeves. Don't think of these things as so difficult. Oh, I don't know how to do it. No, you know, like, search online. You now know where to get the money. You don't know who's got the money. So I think a lot of the things is, don't be scared of rolling up your sleeves. If you have the time and the competence, you can also build up on the way. Because remember, the time you speak to the first person, they'll ask you a bunch of questions where you're like, I didn't know that. I didn't know this. I don't know that. And then the next time you present, you have adjusted those things. And then by the time you speak to the third, to the fourth, you now have an idea of how to do it. And in the case that you're like, okay, I need someone to help me with this, where exactly do you need help? And also, are you clear on what you want before the externals come in? Because the externals come in with their ideas and so on. So it's important for you to also have clarity. And are you also prepared to pay for it? Because sometimes when you get external help, you have to pay for it. So it will cost you something, but cost is not material in the context of benefit sometimes. So you have to assess that if I'm looking for $10 million and then I have to get an advisor who's going to cost me X, say, I'll give an example, $15,000 or $20,000. In the context, you can see how much the trade-off. It doesn't make sense for you to say,
small trade-off.
It's a very small trade-off. And then also understand the role of investment banks and advisors. So an investment bank is advice with money. What I mean is, you come to them, you're like, oh, I want to do this, I want to raise money and do this and that. I want to raise $5 million. And then they will say, no, I'm putting in my $2 million. Let's go and look for the other 3. Do you realize that's very powerful than going out by yourself and saying, I'm looking for $5 million? Or the fact that an investment bank, let's say it's Citibank. Citibank comes and knocks and says, I want you to, hey, Mr. Asset Manager, I've got this client, they're doing this and that, and I'd like you to co-invest with me, or I'd like you to invest with me, to invest in them. Now, the thing is, that's very powerful because that's someone else giving you credit to the market. So investment banks are also a very powerful channel, because going to them, and advisory businesses, because they also have the network, they know who to talk to, open doors and so on. And usually the major portion of their fees of paying them is backloaded. It's success-based. And then the minor portion is things like documentation, preparing the information memorandum and the financial model. Why do they charge you for that, even if they don't raise money? Or why, for example, an advisor, someone like me, for example, why would I charge you that? Because you understanding the financial model of your business is incredible value. Sometimes it will mean you make the decision to do something or not, which you cannot do without that infrastructure. So it's also important to separate the two, but that portion is usually minor in the context of whatever you'll be raising. And then also, it really depends on how much you're looking for and from who. Institutional investors especially are very procedural. They have investment committees, they have risk committees, they've got this, that. People, a wide range of decision-making criteria. Sometimes it's actually more efficient, for the sake of time, if you can get someone to put it together for you. It's a fantastic advantage in terms of time. Put it together in a way that they understand, such that by the time they get the thing, they've got 90% of the questions that they wanted to ask answered. But the thing is, it also makes sense for you to engage someone who also spends a lot of time answering those type of questions to help you. The same way someone would come to you for your business because you are in that business as well. So I think that really just gives an overall overview of where you can get external help. So, for example, if you're getting help from an advisor, is preparation of the financial model. A financial model is not whilst you can make it as simple, but the higher amounts you want to raise, it has to show more depth. And investors have to have the ability to play around with the assumptions that you have about the business. Does the thing work? If I change this, what happens? If I change that, what happens? And sometimes building a concrete financial model actually requires someone who has a competence in that particular area. And then building the business case, the information memorandum, trying to answer the risks, preempting. That's the whole game, preempting and de-risking. That's it.
Yes.
Things like roadshows, deal structuring. How exactly are we going to structure the deal? What portion do we get in debt? What portion do we need in equity? What are the terms of the debt? What are the terms of the equity? Do we need a mezz finance facility? Things like that, where you might not necessarily be an expert in. I think in cases like that, you must consider getting external assistance. We do, like a 30-person consultant. This is what we wake up to do the financial models, wake up to do the information memorandums, the deal structuring, the investor mapping, and things like that. But in your areas as well, there are people that you might know that, look, if I speak to this person, they might help me. But ultimately, the point is, when you speak to them, have a presentation like this in mind. Understand, think for yourself, understand what you want. Don't get them to lead the conversation. They help you. They help you in the case. You are the entrepreneur. You are the one who gets to live with the consequences of the deal. So one thing, I'll say this, most of the time, like I'll advise a client, I'm like, no, you know what, don't do that. Or I'll say, do this. Sometimes what I suggest is expedient to the transaction, but might not be expedient to the entrepreneur if they know something else which I don't know post the transaction. So meaning that it's also important for you to be an active participant in the conversation. As much as they've prepared, review that financial model, look at it, look at the assumptions. Do they make sense to you? Review that business case, review that information memorandum, make notes. It's important. You have to be involved. And then the roadshows. Roadshows just means you literally going to different places and looking for money, knocking doors and say, okay, I've arranged a meeting with this and this person. Can we go together? And we go to them. But basically, that gives a framework on when you need external help. But the idea behind a webinar like this is to empower you as much as possible so that when you come to people like us or an investment bank or an advisor, by the time you go to these people, you are also very clear about what you need and what type of help they can, or what type of benefit they can bring to your life. Yeah, I hope that kind of gives an idea of at what point should you look at this point, I need to get someone else or something like
that. Yes. All right, so that was quite helpful. So guys, those are all the questions I had. In case you have any questions, we'll give it a minute. You can post them in the group. If you need Mr. Caleb's contacts, I'll also share them in a post email after this, and a link to the video will also be available, and a link to the PDF document that quite a number of people have actually asked for. So these will all be available. So, but in the meantime, if you have any questions, please, you can add them. Let's just give that a minute. But other than that, those were all the questions I had. I hope that was quite exhaustive. So yes,
awesome.
Yeah, someone has just said thank you. He said thanks, Kenneth, but ideally this is supposed to be thank you to Caleb because you're the one that has done most of the talking.
Thanks to Kenneth for organizing this. I think it's very valuable. It's incredibly valuable. And I think in Africa, we don't have a lot of these platforms. When you're in the West, it's like you can literally just walk to Silicon Valley and just see what happens there. But the thing is, in Africa, it's like everyone is in their little silos. No one wants to share what they're doing. No one wants to share how do I actually get it over the line. No one wants to share this stuff. But I'm like, why? So I think it's incredibly valuable that you organize something like this where I don't know everything, but the little I know, I'm certain it can be useful to some of the guys on the platform as well.
Yes. All right, thank you very much, Caleb, and we'll have you among. We have another event coming up. It's, I think, the African Sales and Marketing Expo. That will be in September. I hope you can be one of the guys to speak, teaching people something to do with finance. And yes, I'm seeing Peter just said thank you. Yeah, and guys are asking for a copy of this information, so I will share that alongside your contacts, that if anyone needs to reach out to you, well and good. And thank you guys for attending. And don't forget, in case you need software to help you run your business, Monkey Pesa is the place for you to look at. We'll be launching the joint inbox next week, which is just one place for you to communicate to your customers, meaning wherever they're coming from on the internet, whether it's TikTok, whether it's Facebook, whether it's Instagram, whether it's email, whether it's WhatsApp, we bring them all to one platform so that your entire company can handle those queries together. Meaning if I'm in sales and the query is mine, someone in customer support can send it to my direction. If it's an accounting issue, I can forward it to the accountant to manage, if it came from Facebook, if it came from TikTok, or email. Ideally, that's what the joint inbox is for. It will be live next week, and we'll share a link in case anyone has a company with more than 5 people that would find this quite helpful. That's all from us today, folks, and thank you very much once again, Caleb. And for everyone that has attended, yeah.
Thank you very much. I look forward to attending your sales marketing. I think just for everyone's benefit, I think one of the things I have personally learned from Kenneth is, even on our journey, because he's done a lot of business development, and I think we're privileged to actually have someone who has started businesses, or at least most of the money that you've raised is really like organic, created a balance sheet, and I think that helps a lot because it speaks from experience as well, because you're not just teaching these things, these are things that you've done and have proved quite successful. So I also look forward to the sales marketing seminar, because I know it's been of huge personal benefit to me, so I'm sure it will be as well to the other guys on the platform.
All right, so, and one more thing, every 2 weeks we'll be holding one webinar, so on very provocative stuff that we need to learn, whether it's on customer support, whether it's on sales, whether it's marketing. I mean, we could all improve our businesses. So we'll keep sending in invites for whichever you can come for. It would be quite helpful to you and your business. That's all from us today, folks. For everyone that wants me to send a copy of the video, please just leave your email in the description below. I'm copying quite a number already. That's all from us today, folks. Bye-bye.
Thanks, everyone. Have a good day.
Right.
Thanks, Kim.
Bye-bye.
Cheers.